Good day, Junior Techies. I'm Mrs. Brumiko. We are going to look now at cost accounting activity 3. Question 3.1. Indicate whether the following statements are true or false. The wages of the factory workers are regarded as an indirect cost. This is false. This will be regarded as a direct labor cost. Question 3.1.2. Depreciation on delivery vehicles is regarded as a variable cost. This is true because delivery vehicles with depreciation calculated on that will form part of my selling and distribution cost, which forms part of the variable cost. Question 3.1.3. Prime cost is calculated by adding direct material cost and indirect material cost. This is false because to get our prime cost, we need to take direct material cost plus direct labor cost. Question 3.2. Costume manufacturers. Simpiwe owns Costume Manufacturers, a costume manufacturing business that makes party costumes. All materials are purchased in South Africa from different suppliers. So we're going to look now at all these questions given to us and how do we need to approach it. If we look at what has been given, information, the stock balances, details of the factory employees, which is the factory foreman and the cleaning staff, as well as workers in the production. Then we've got information C, the fixed asset note on delivery vehicles and factory equipment. Take note how depreciation, the tangible asset or fixed asset note can be incorporated in manufacturing. They provided us then with information D, where the bookkeeper calculated the following cost for the year ended 31 March 2022. So the factory overhead cost, selling and distribution cost, and the administration cost was calculated. But now it was discovered that the following was not taken into account, which means that we will need to adjust those totals. Information E, the transport from the suppliers of raw materials, and then information F, the additional information. So before you start with the activity, make sure that you familiarize yourself with the information given. Question 3.2.1. To calculate the direct labor cost for the year ended 31 March 2022. Direct labor cost means that we need to look at the workers in the production. So to work out the normal time, the number of workers are 10. Normal time is 1,760 hours per annum per worker, and the normal time rate is 92 Rand per hour. This is why we need to take 10 times 1,760, and then we're going to times it by 92 to get the total normal time. To work out our overtime hours worked is 9 hours that was recorded, and the overtime rate is 1.5 times the normal rate. This means that I first need to calculate 92 times 1,5 equals the overtime rate. Then we're going to times it by 900 to get the total overtime. The employer's contributions amounts to 8% of the basic wage towards all employees in the different departments. This means now to work out the contributions, it must be calculated on the normal time. And that is going to be times 8%. So to get the total direct labor cost, it's the total normal time plus total overtime plus total contributions. Refer now to information C. Calculate the amounts for A to F on the note for delivery vehicles and factory plant and equipment. So if we look at A, To find out what is the accumulated depreciation, we have to take the cost minus the carrying value in the beginning to get the accumulated, which is 488,000. For number B, to calculate the total depreciation. Depreciation must always be calculated on the old, the new, plus that which we have sold. So if we look at the additional information, a new vehicle was purchased on the 1st of July 2021. The cost was 240,000. Vehicles are depreciated at 25% per annum on diminishing balance method. This means that we need to use the book value, and to get the book value, we always take cost minus accumulated depreciation. So to find out what is the depreciation on the new, depreciation must be calculated from the day we purchased it until the end of the accounting period, which is then 9 months. The cost was 240,000. Because it's the first time that we're calculating depreciation, diminishing balance method is not applicable here. There's only a cost. It's the first time that we're calculating it. To calculate on the remaining, it's always equal to 12 months from the beginning of the accounting period until the end of the accounting period. This means we need to use the carrying value times 25%. So my total depreciation is the new plus the old. For number C, to get the cost at the end of the accounting period, there were no disposals. So we are going to take the cost in the beginning plus additions equals the total cost at the end of the accounting period. For number D, factory equipment now, disposal at carrying value. This is a bit more complicated. If we look at what has been given to us, old equipment was sold for 30,750 cash on 30 November 2021. A loss of 3,000 was made on the disposal of equipment. This means that I do not know what is the cost of this asset which we've disposed of. I do not know what is the accumulated depreciation on that asset. So how do I solve this? First, to find out the cost, we can open up a T account, equipment at cost, and we fill in what has been given to us, the cost in the beginning, plus additions, minus the cost at the end of the accounting period. So if you take the debit minus the credit, the balancing figure becomes the cost of the asset which we've disposed of. So now I can also use the asset disposal account as a T account to find what is it that I'm looking for. The cost we've just calculated is 75,000. I would always have on the credit side the total accumulated depreciation on the asset which we've disposed of. The total means the beginning plus updated. The selling price, and in this case we made a loss, which means the loss will appear on the credit side. So if I look at the loss is 3,000. The selling price is 30,750, which means that this accumulated depreciation becomes the balancing figure. Now we can take cost minus the total accumulate equals the carrying value on the asset which we've disposed of. To calculate number E, the depreciation, remember depreciation is calculated on the old, the new, plus that which we've sold. So new equipment was purchased on 31 January 2022 to replace the equipment sold. So the cost of the new equipment was 80,000. Equipment is depreciated at 15% per annum on cost. So to find out the depreciation on that which we've sold, it's always calculated from the beginning of the accounting period until the day that we have sold it. This means we need to calculate it for 8 months. Take the cost, which is 75,000, times 15% times 8 divided by 12. To calculate on the new, it's from the day we purchased it until the end of the accounting period. It's purchased on 31 January, so we only start counting from February. That is equivalent to 2 months. So the cost is 80,000 times 15% times 2 divided by 12. To calculate the old, now it's very important. The cost in the beginning is 320,000, but this includes the asset which we've disposed of. And we've only had that asset for 8 months. We've already calculated the depreciation on that. This is why we need to take the cost in the beginning minus the cost on the asset which we've disposed of. And then we're going to times it by 15%. My total depreciation would be the sold plus the new plus the old equals the total depreciation. To calculate F, the accumulated depreciation, if it's easier for you to complete a T account, there's nothing wrong with it. But to calculate the total accumulate, we're going to take the beginning minus the total accumulated depreciation on the asset which I've disposed of plus the depreciation equals the total accumulated depreciation at the end of the accounting period. Question 3.2.3. Prepare the following notes to the production cost statement for the year ended 31 March 2022, direct material cost and factory overhead cost. So when you approach this, make sure that you take the information given, fill in where it's supposed to go, and then you will start to see what is the missing pieces, what is it that I will need to solve. So if we start with opening stock, the balance is given to you for raw material stock in the beginning. Then the total carriage on purchase, they said to us, costume manufacturers make use of transport company for deliveries of raw materials. They paid 331,500 per annum, which is 15% of the total purchases. Net purchases of raw materials still need to be calculated. So they haven't given this to us. But because we now know that 15% of the total purchases was for carriage, it means that I can calculate the net purchases by taking the carriage, the transport, and we say times 100 divided by 15. Now we can say opening stock plus net purchases plus carriage on purchases. But now there's a problem. If you have a look, the raw material stock at the end is a question mark. I still need to calculate direct material costs. So I've got two unknowns. So what are my options? They said to us with information F, additional information. The business used a markup of 50% on cost. The business produced 76,000 costumes at a cost of 70 Rand each, which means that I can calculate the total cost of goods produced during this year. If we open up a T account for work in process, it means, or work in progress, stock account, it means that the balance in the beginning is given to us, 45,000. Then the balance at the end is given to us. We can calculate the finished goods stock by using the business produced 76,000 costumes at a cost of 70 Rand each. We have calculated direct labor cost. We can calculate the factory overhead cost. So we first need to solve that before we can complete the direct material cost. So if we look at our factory overhead cost, and now at the same time we're going to complete the bridge statement of comprehensive income. We are going to start with the totals that were given to us. Factory overhead cost, the selling and distribution cost, and the administration cost. So we're going to write it in brackets in the income statement because we still need to adjust those totals. Then they say to us, the depreciation for the year ended 31 March 2022 on delivery vehicles and factory equipment. This must still be taken into account. So if we look at B, we've calculated the depreciation on the delivery vehicles, which means it will be added to selling and distribution cost. The total in number E, the total depreciation on the factory equipment must go to the factory overhead cost. The loss on the disposal of factory equipment was incorrectly recorded as an administration cost. So it was shown, but incorrectly as administration, which means that we need to take it out, the loss of 3,000, out of the administration cost, and it must be added to your factory overhead cost. The bookkeeper recorded the salary of the factory foreman as well as the cleaning staff, but omitted the contributions by the business. Now remember, the business contributes 8%. So the factory foreman and cleaning staff was 360,000. This was recorded. So to find out the contributions, we have to take that times 8%. And this will go to my factory overhead cost. Bad debts written off to the value of 36,000 was posted in error to the administration cost. So to correct this, it means it must be taken out of the administration cost and it must be added to the selling and distribution cost. The total rent paid on the selling and distribution department was 208,000. Rent is apportioned in the ratio 2:1 between the factory and the selling and distribution department respectively. However, the selling and distribution rent has been paid until 30 April 2022, which is outside of our accounting period, while the factory rent has only been paid up until 28 February 2022, which means that if our accounting period ends March 2022, 1 month is still outstanding, which means this must be added. So to find out the total, the monthly rent for the selling and distribution, we have to take 208,000 divided by 13, which means 16,000 must be subtracted from the selling and distribution cost because this was paid in advance. Now, to find out what is the total rent supposed to be, we have to minus that, which is equal to 192,000. Now we can calculate by taking 192,000 times 2 divided by 1 means that the total rent for factory was 384,000. The monthly rent is 52,000. Now remember, 1 month is still outstanding, which means that 52,000 must be added to the factory overhead cost. You could have also said 192,000 times 3 divided by 1 to find out the total rent, then take it times 2 divided by 3, then divided by 12. It will provide you with the monthly rent that should be added. So this is an alternative way to get to exactly the same answer. Remember, we're not going to show the total rent for this accounting period. It's only 1 month which is outstanding. The factory overhead cost has already been recalculated. The total amount spent on consumables were 47,600. Consumable stores were only used in the factory and selling and distribution. 30% of consumable stores were in the selling and distribution, which means that 70% will go to the factory. Please do not forget about the opening and closing balances for consumable stores. If we open a T account, whatever was left over at the end of last year forms part of our expense this year. Whatever is left over at the end of this year must be subtracted and taken to consumables on hand. Our total purchases was 47,600. This means that our expense for this year is 45,490. 30% of that will go to selling and distribution and 70% to the factory overhead cost. This means that we're going to add it to our factory overhead cost, the 70%, and also in my selling and distribution cost, the 30%. A total of 23,100 has been paid for factory insurance. An insurance increase of 9% was implemented on 1 March 2022. Insurance for March has not yet been paid. This means it's still outstanding. So to find out the monthly insurance, we're going to take 23,100 divided by 11 because 1 month is still outstanding. Then we're going to times it by 109%. That equals the total, which is 2,289. This is including the 9% increase. If you take 2,100 times 9% and then you add it to 2,100, you will get exactly the same answer, 2,289. This means this must be added to my insurance in the factory overhead cost. Once we've now looked at all the adjustments related to the factory overhead cost and what will go into our income statement, we can total the overhead cost by adding all of that. We can close the bracket for selling and distribution cost. So this is my total selling and distribution cost, and the same for administration cost. It is imperative that you make sure that you show your calculations in brackets. To get the total other expenses, selling and distribution cost plus administration cost. Now, if we look at calculate the cost of sales for the year ended 31 March, I need the cost of sales to complete in my income statement. So to find out what my cost of sales is, we can use the finished goods stock account to solve this. My balance in the beginning, 510,000. My work in process or progress for this accounting period, 70 times 76,000. Cost of sales becomes the balancing figure. The balance at the end were given to us, 640,000. Once we've calculated the cost of sales, we can now calculate our sales using the markup percentage of 50%. So to calculate our sales, we have to take the cost times 150 divided by 100. Sales minus cost of sales equals gross profit minus other expenses equals net profit. Now we can finish the direct material cost. We've calculated the finished goods stock, the cost of finished goods produced this year. The balance at the end was given. We calculated the factory overhead cost and direct labor cost. The balance at the beginning was given. That was the end balance. This is the balance in the beginning. So the balancing figure is my direct material cost. Once we've calculated direct material cost, it means we can now calculate the closing stock balance. The difference is my closing stock. Thank you very much. Next, we're going to look at activity 4. Don't let what you cannot do interfere with what you can do.